Hello and welcome to another episode of the Finrestra podcast. My name is Jan Muscholt. In today's episode, I talk to Koen Vingerhoets. Koen is an expert in blockchain technology and has worked for years on the applications in several corporate environments. Hi Koen, thanks for being on the podcast. How did you get interested in blockchain technology?
Yes, Jan, and thanks for having me on your podcast. I got interested in Bitcoin, I think, the first time around 2011, but back then I just ditched it as a thing for computer programmers. But then around end of 2013, early 2014, I was working at the bank and I saw this white paper. I checked it out again, and it started with saying that we could do payments without going through a trusted third party, without going through financial institution. Literally, when I checked my paycheck, I saw on top of it a bank, and I thought, wow, this could be troublesome if it's really true. So I started checking out the Bitcoin ecosystem, because the bank does way more than just shift a coin from A to B. And I wanted to see if it really could replace the financial institution or the financial sector even as a whole. So I started mining Bitcoin, I started buying Bitcoin, I started spending Bitcoin on the craziest stuff, cloud mining when it was not a thing yet, Bitcoin exchange in which you could buy shares that had a value in Bitcoin, but you could only pay with Bitcoin. And with the last one Bitcoin and a half, I bought a watch just to see how things would work using Bitcoin. And in the bank, after in 2015, it became more of a hot topic. And as of 2016, it literally became my job to work on blockchain projects. We let Bitcoin and Ethereum back then and everything else a bit aside. We were focusing on enterprise blockchain, and I've been doing that ever since then.
So it started as a personal interest, and then it morphed into really a professional topic for you.
Yeah, indeed. Although the personal interest was also a bit professionally inspired, I just wanted to make sure that I still had somebody to pay my paycheck, to pay my wage.
Yeah, that's a good idea to have a paycheck. So when you started or when you became interested the first time in 2011, I think very few people except for some programmers were interested. And then in the years after that, you were, or I found some articles saying, oh, this is a bubble. People have been saying this about Bitcoin from the very beginning. But then interestingly, you get to find some articles that were like really hyping the blockchain technology, like really Bitcoin is gonna revolutionize everything from banking, like you already mentioned, but also people were dreaming about how blockchain technology would replace notary. So if you want to do a real estate transaction, that you can just register everything on the blockchain, and then you will not need the government to interfere. But of course now in 2021 we are still very much used to the old-fashioned system, and it seems like it has all been a hype. But do you agree with this sentiment? Has it been like exaggerated, or is there real potential that has not been materialized yet but will in the future become a reality?
No. Well, to start with, I don't think we have to wait until the future to see it become a reality. It's already used today in live applications, so it's not a dream. It exists. It creates money. It creates value. It generates business. Enterprise blockchain. Now you still have all the crypto assets, which is a huge market of, I guess, again, close to $2 trillion. So I wouldn't say it's just a figment of our imagination. It's there. But back in the days, the hype was there. I can't deny it. I mean, I was traveling all over Europe almost to talk about blockchain, and everybody was having the craziest ideas. Anything could be solved with blockchain, and we could use it to improve or change everything, or decentralize everything, or change everything, overhaul governments, change tax. But in the end, it's just a technology. It's just a database with a few specific traits. And the thing that makes it special is not necessarily the technology, it's what you do with it. It's how you can collaborate and improve and change things for the better. And that's literally beyond the hype. Even in the financial sector, initially we were looking at user focus, at end user focused things with blockchain, but it's a database. It's the same like thinking that SQL Server or Microsoft Access will change the life of your customers. It probably won't. So it was a time where dreams were big, but it's typical. It's Amara's law, where we think linear, but evolution of technology follows an S-curve. It's also the base of the Gartner hype cycle. So when something starts, our dreams start increasing quite linear. Every day we think, wow, it will be better than yesterday. But for technology to grow, it takes a long time to improve steadily, slow, things go wrong. And then in the end, all of a sudden, when it works, when it really functions, when people see the added value, then it goes through the roof. And I think we're close to that point, or perhaps already across that point. That's always hard to say. But yeah, the hype was there initially, but it's just how we look at new technologies.
Yeah. And it's very fascinating that you say for enterprise applications, because of course the philosophy of Bitcoin used to be your own bank and we're going to not need banks. But in fact, then you see that the real application, or like people also, if they trade cryptocurrencies, almost everybody goes through an exchange and not peer-to-peer. And now you also see it like also for enterprises. So it's actually the big corporations or maybe even the governments that use this technology, but not the retail client or ordinary people.
Yeah, indeed, but don't say it out loud, because a lot of people will deny the light of the sun if they hear it. But yeah, indeed, it started as a use case of peer-to-peer payments, but at the moment it looks more like a high-risk, highly volatile investment. You can get lucky, you can have bad luck. Overall, the value still seems to increase, but it's hard to predict where it comes from. In an unregulated market with unknown pseudo-anonymous players, they basically can do what they want. But yeah, it's indeed, it didn't change the things it was predicted to do. But I don't think that's a bad thing. It is what it is. It will be there. It has a use case that's clear. If you're going to wire money over the planet, it's way easier, way cheaper to use Bitcoin than anything else. Well, than anything else is broad to say, than the traditional financial system. But it's cheaper for you, not necessarily for everyone else. So with Bitcoin, the profits are internalized and the costs are externalized. Everyone has to pay to have the infrastructure there, to have electricity, to have a network. And that's something that, in my opinion, the Bitcoin maximalists usually overlook, that there is an entire infrastructure there to rely upon that is paid by state money, paid by taxes, paid by or supported by regular companies. And if it would break down, they wouldn't have their Bitcoin either. So it has a use case, but I wouldn't be, I would still keep an eye on the old world as well, because they rely heavily on it.
Yeah. So the main reason I invited you, like there are, broadly speaking, like two uses of blockchain and crypto technology. Like the first is really the purely digital. So you have the cryptocurrencies and now also the NFTs. But then the things that I'd like to talk to you about are the real applications. And you already mentioned it, that some projects are already in production, are already being used. Mm-hmm. Can you give a couple of examples of blockchain that is now already running and used for real world applications?
Yep. It's also important to know there that while it's still often labeled as a blockchain project, It's again not blockchain that is the most interesting part. It's still just a database with a few special peculiarities, and you can exchange data on it in a more efficient way, and you can drive processes on it on a more efficient way. But it's a collaboration on top that really changes the world. We have a smaller project nearby in France. There is a circular chain, if I remember the name well, where they use mud to replace the result basically from water recycling. They use that to fertilize the fields in the neighborhood, or well, in the area there. It's a legal obligation, if I remember well, that they have to fulfill. And it works. They're just tracking how they fulfill this legal obligation and how many of this mud is spread where. And the government can take a look because everything is there in the ledger. In the financial sector, you have things like WeTrade, which is like one of the first enterprise blockchain applications. It started a long time ago as digital trade chain, but now it connects banks all over Europe. It improves the working capital of a lot of SMEs. So it's there, it's alive, but it's not positioned as we use blockchain. This is the best application. It's positioned as we improve your working capital. Yeah. And we have a few special things that are only possible on a blockchain.
So this WeTrade is really, yeah. So does the customer somehow feel that he's interacting with the blockchain, or do they think business as usual, but then it's the banks that process the documents?
The blockchain is between the banks, so it's not something that the customer sees. It's not like in a Bitcoin blockchain where you can go online and check out every transaction. That's not how it works. So it's between the banks.
Yeah. So suppose that we both have an import-export business, and I'm in Belgium and you're, for example, in the Netherlands. Then we just go to our regular banks, and those banks do all the processing behind the screens, and then.
Well, they have to be affiliated to the WeTrade network, of course.
Okay. Yeah.
It's not every bank. It requires a trade finance bank to do so.
Yeah.
But also for supply chain, you have a few projects from IBM that are live in the US, in China, tracing pork meat. You have TradeLens, which ties into the supply chain streams across the world. There are a lot of projects live, but they're no longer really pushed as blockchain projects because it's really not the most interesting part of it.
Yeah.
You also have in Belgium Energy Web, which it's not only in Belgium, it's also a larger project, but you have Belgian energy operators participating in it. There's a lot ongoing that is live.
Yeah. So, but there's really value in this technology behind the screens. You said that it can reduce working capital. And I imagine, like for energy traders, if it wouldn't reduce their costs or be profitable in some kind of way, they would still do things like they used to before. So there must be some advantage.
Yeah. Well, the advantage lies in the collaboration. If you have the same pain and you can solve it together, you all pay less. And if it's not a unique selling point, then it doesn't really matter how it is solved. Yeah. In Belgium, for example, we're looking at a KYC solution or an upcoming KYC solution for SMEs.
Maybe for the people who don't know, KYC stands for Know Your Customer.
Know Your Customer.
Yeah,
So it's developed by Isabel, a collaboration between the banks. And now I lost my thread.
Yeah, so that
collaboration.
Yeah, that you need a collaboration of multiple players.
The Know Your Customer of SMEs, it's a challenge for every bank, but together they can solve it in a more efficient way. They can split the costs. They can make a little bit of money out of it for themselves if they validate SMEs for other banks. So it's just a whole other way of working around KYC, but it will make it a way more efficient process. If you do that with point-to-point communication, it will be costly because every bank that is added creates a whole lot of new point-to-point communication points. That's Metcalfe's law. If you use a blockchain there, you already standardize how data is exchanged. You standardize the processes, and the only thing that a new bank will have to do is put the right data on the ledger, read the APIs, and well, it's probably a little bit more complex than that, but it's less complex than having point-to-point communication with every other bank.
Yeah, and if you have this kind of collaboration between parties, can every participant see everything on the blockchain, or is it somehow shielded, or is there one major party that can select who gets to see what information?
Oh, that's a very good question. When I talk about blockchain, the only thing I will always try to explain is the difference between public and private ledgers, and also permissioned and permissionless ledgers. It's not all the same. So a Bitcoin blockchain, which is fairly known and also fairly transparent, you can look up any transaction that happened since 3rd of January 2009, but it's a public permissionless ledger. It's open for everyone, and you don't need to ask anyone whether you're allowed to join or leave. Anything you can do to obtain a Bitcoin is okay. You can mine it, you can steal it, you can write ransomware for it, you can just buy it, you can trade it. Everything is okay. You don't have to ask permission. So public permissionless. Completely the opposite is usually the enterprise section with private permissioned ledgers. It's private, it's shielded, it's not in a basement of one company. That's often the idea, but it's still shared. It's just shielded. When you walk outside the company, you don't see that they're using a blockchain. If you go to their website, you won't see it. You can't dig yourself into the ledger. They have APIs to connect with it, but the ledger is there. It's connecting several companies, but it's private, it's shielded. And then it's usually also permissioned, which means everybody is still equal, but some parties are more equal than others. So you have a centralized or a central entity that steers the user rights. Who can read, who can write, who can read what, who can write where. If you have, for example, a regulator that is part of it, you would like to have this regulator perhaps read everything, but write nowhere. Okay. And for a bank, you can write in your own part, but you cannot even read the customer data or any details about the customers from your competitors. That's not allowed. So you need someone to regulate that. And a benefit or an advantage of that is that the central entity can also follow up on the development of your blockchain. If there is a bug in the code, like still happens also with Bitcoin, you don't have to plea or beg or make public announcements like, we found a bug, can everybody please update? No, you just try to process. First you update half your nodes. If it works, you update the other half, and you're all again on the same version. But you need coordination to do that. You need somebody to onboard, to offboard, and that central entity will just help. So in a private permissioned ledger, there is a central entity that takes care of these permissions, of these user rights, and especially the transparency, who can see what. Yeah. And once it's in the system, it's there.
Yeah. Because recently there was also an incident where I don't know if it was an exchange, but they accidentally wired like $70 million, I guess, worth of crypto to some wallets. And then they had to almost beg the people behind the wallets to return the funds. But in this enterprise environment, you'll never have this kind of problem, because there are like so-called like adults in the room that can decide like, yeah, we made a mistake and now we're gonna fix it. And also because the participants are big banks or like are professional players and not anonymous accounts.
Well, let's hope that's true. The fact that my bank apps still update also means that they still find bugs in it, and of course add new functionalities. But yeah, code that is written by people will generate errors. The liability is just different. In a bank, there will be more controls on it. In this I think it was Compound that you referred to. Their code was public. Everybody could have checked it, but only one guy saw the mistake and used it. Yeah. Well, not one guy. They made a stupid mistake in which they used an account to give people rent, to give people an interest on money that was on their platform, and they changed something that caused a flaw that was already there for I think 1 year or 2 years to trigger, in which they equalize the date instead of compare the date. So people who had their money only there for a short time got interest as if it was there for a long time. And the reason that it stopped at 70 million was because the account for which they pulled the interest was depleted. If there would have been more money on it, it would have been worse. So it's a weird way of working that is in a bank quite unthinkable. But if you involve other people that can block the process, it also takes away the advantage of using a blockchain, which processes are automated or can be automated to far further extent. But it for sure highlights the need to limit systemic risks. Once you trigger a smart contract, it's automated and enforced, and it can trigger any other smart contract on any ledger that is also automated and enforced. So it has to be done properly, checked by experienced people. But even then, it's a risk to have automated processes. But yeah, you know, the fat finger error in the financial sector, it's not new. It exists already. So let's hope at least that when things go wrong, that in a public or in a private permission system, you don't have to beg to get your money back, but you can use the identity of the people in the system to simply return it with legal agreements, with a wet signature. This is how we play, and we play nice.
So you'll have the opportunity, or if something goes wrong, there's some higher authority that you can appeal to say like there is a mistake, and if it's on the blockchain, you cannot rewrite the past, which is a benefit, but at least you can correct it.
Yep. Yeah, you cannot rewrite the past, but you can indeed write the future. And if the money has to go back, you can fix that. And it's an advantage of the private permission systems. It's private, it's hidden behind the door. How do you get into a private system? By showing who you are and proving that you have the right to be there. So there is always an identity in a private permission system. You know who is doing what, and that's an advantage compared to public permissionless systems, where you're always hoping that it's not a dog trading with your Tesla, but that it's really humans, and then hopefully they listen to the plea.
Yeah, but of course, there will always be bad actors if it are not the banks themselves. Like for the know your customer, of course, like criminals or people with some shady plans, they will always try to cheat. How can you try to prevent that bad information gets into the blockchain? Is it really up to the banks, or who are the gatekeepers for this information?
That's a very, very good question, and it's something to reflect upon as well. Huh? So how do you keep bad information out? Well, you can't. If you want to cheat, you'll always find a way to cheat, and if it's not on a blockchain, then you'll just use cash or whatever. But the blockchain is not it's not sprinkled with fairy dust. It doesn't make untruth into truth. It will just store whatever it is offered. So that means that if you start to lie, if you start to cheat, the evidence will not disappear. It will always be there. And again, in a private permission system, which most enterprise systems use, we're going to still draw contracts with a wet signature, with clear definitions and sanctions on what happens when you try to cheat the system. And instead of relying on a court of law, it will be easier because the evidence will be on the ledger. Everyone can see, or well, if you have the rights to see it, you can see that somebody was cheating. And you cannot change that evidence anymore. And it will change the way we work. But if you don't have sanctions against it, if it's everything is okay, then you will still be able to cheat. That's not something that the blockchain can't solve. It's only something that a wet contract with liability can solve. Yeah. And even then, if you still want to cheat, at least you will get punished. So it's something that always baffles me a bit, that the crypto world is cheering like, look, this bank had to pay a huge fee because they trespassed on AML regulations. And I'm like, I have to applaud because that's amazing. They did something wrong and they will pay. When will that happen in crypto?
Yeah. And is there already legislation, like either here in Belgium or at the European level, that makes rules for the application of blockchain technology, or is this all voluntary between private parties?
It's a technology that is being shared. If technology is neutral, it's usually not regulated. It's the use of technology that is usually regulated. So on European level, we're looking at MiCA, markets in crypto assets. That will be really nice to have that regulation active, still being worked on. I think it will take like 2 or 3 more years before it will be active. That really will be a step forward. And at the moment, it's a bit different between the different countries. Some have regulations like France, like Germany, like Luxembourg. Others have no regulations like Belgium, but no regulations is actually not the right word to say. We have no regulations that are tailor-made for assets on a blockchain. You can still apply the regulations as they exist. They didn't change because you use another neutral technology. It sometimes becomes a little bit difficult to interpret the regulations. Agreed. But other than that, it's there, but it's upcoming. It will be regulated, or there will be more regulation around it.
Yeah. So, but by and large, it's just a neutral technology that can be used for good or bad, and the existing property laws and other regulations just apply, but it's private entities that use this technology to change the way they do things.
True. They just apply, but it can make things very difficult. If you have a share and you tokenize it, you can sell it to 1,000 other people if you want. But it doesn't make it easier to figure out who is a shareholder, who has the voting rights. It's just a different world, and it will be easier if we have specific regulations for some things. It's also a bit of a wild guess to see where this regulation should be. If I remember well, the Federal Conduct Authority in the UK, they have a sandbox, and on one of their first rounds, they had like I think 75% of the parties were blockchain oriented, startups, companies, scale-ups, and they said, again, if I remember well, it was on a presentation on a conference from R3, that there was actually no legal problem at all from the sandbox coming up. Everything was okay. So perhaps it's not as bad as we think. Perhaps we're just a bit afraid of what could happen, but things do happen. We now have real estate tokenization live in Belgium, which was deemed to be rather difficult, but it's fixed. It works.
Okay, I didn't know that. Is it something recent or?
Yeah, it's recent. It's a website called imotokens.be, and it's a smaller player, but they managed to crack the code to have tokenized real estate.
Yeah. So you can own a part of a house or a building?
Well, no, because that would be quite difficult in a legal way. You don't want to have 1 million owners. So it's actually a debt token. They have a loan with the property as collateral, and you just buy a part of the loan, basically.
Okay, like that, yeah.
But it's a way around within the legal framework that works. So also FSMA approved. So it's not something they do that is shady. It's okay. It's what they do is not wrong. It requires a little bit of, let's try it this way. Let's see if it goes. And well, actually it did.
Yeah. Maybe something else that we need to discuss is so if it's for large banks or like in France, if the government is involved, then I guess there are lots of experts and consultants who can work on it. But for small and medium-sized enterprises, it's probably going to be very hard to work together with a lot of players themselves.
Well, that's indeed a fair challenge, and I think, well, it's my personal opinion, that it's one of the reasons that blockchain is not growing like it does in the neighboring countries, because Belgium is a country of SMEs. We have a lot of small and medium-sized enterprises. They do great business. They export, they import, they make the economy run and work. but there are also small players who don't necessarily know each other, who don't necessarily have the overhead to work on projects that do not immediately bring value, that could turn into nothing, that indeed involve a lot of parties on all sides. Blockchain is really, you don't know how many sides you're talking with, but you have a lot of parties all over the place, and that doesn't make it easy. If you can talk with 3 or 4 big banks, at least one side is clear. You know who to talk with. The government makes it even easier. It's just one party to talk with. It's a challenge, I think, for Belgium, but it's still also something we should try to fix or try to improve, because eventually we will have those solutions that are also active in Belgium, and we either build them ourselves or we'll have to follow what somebody else has been cooking for us.
So it could be, again, the same story like with Google and Facebook and all the other big tech. If it starts in a big domestic market and then it spreads around the world, and then people just adopt to the big existing system, it's possible that the same will happen with blockchain solutions.
It could be, but there is for sure no guarantee, because I mean, if you look at how it looks like today in crypto, Bitcoin still has the biggest market share. There is no big company behind it.
Yeah,
it's still one guy or one girl or a group of people. It's still an unknown someone that created this huge system, and all the other cryptos are still banking on it. So there is no guarantee that that big tech will win this.
Yeah. And isn't there also the risk that we'll see like a fragmentation of all different solutions? Like you mentioned, the WeTrade for trade finance, but it's only a couple of banks now. But suppose that a couple of competitors start their own blockchain, can they somehow interact with each other, or will they stay separate blockchains?
No. Well, it's it's a good remark. WeTrade is not alone. There is already competition active, like Voltron, Marco Polo. So it's not unique. They all have a little bit another approach, but they're all trying to fix trade finance. So they have different solutions, different ledgers. Will they be able to collaborate? I hope so. It's not like a completely unique sealed system. You can still communicate with other parties, but it brings some technical challenges. If you transfer value, because a blockchain is transferring value, if you transfer it from one ledger to the other, how do you know it's not copied? Because that would kind of defeat the purpose. So it's challenging to have it work together, but from a technical level, it can be done. You have companies like Polkadot working on it. It's no longer rocket science to do it. You have atomic transactions, can be done. But it's especially the network that plays there. It's not the blockchain again. It's really the collaboration of banks above. If you are competing with another network, well, then you're a competitor. Then you're not likely to join in the short term, I assume. But it's competition. It's not a bad thing. It's what we have to pursue in business. We have to avoid monopolies. So it's a good thing that there is competition. It will keep the market evolving fast, technology improving, and hopefully good ideas come forth from it.
Yeah, so that seems to be a recurring theme, that the technology itself isn't really the biggest roadblock, but it's really the cooperation of the different players, and they have to find a balance between competition on the one hand and collaboration on the other, and probably also to find like a business model that works. Because I can imagine like you have to decide who runs the servers, or who will be responsible for the costs of operating the system.
Yeah, you're summarizing all the challenges in enterprise blockchain projects. It's indeed the governance, who is going to do what, how are you going to fix it? It's, I think, the most important problem to fix, and decide how to decide, and then start from there. It is the collaboration. Where do you start? Where do you end? Who has to join? Do you need everyone to join? And that's indeed a challenging thing. And then you still have technology, but that's easy to fix. It requires time and development power, but it's not the most challenging thing. It's in the end still a database, but it enables collaboration in a whole new different way, and that's where most of the energy should go through. Should go to really have that done properly. And I think it was TradeLens that made a little error there, for example, when they were young. It was a collaboration between IBM and Maersk, where Maersk kept the IP with them and then invited all their competitors to join the platform. Nobody wants to join the platform of their competitor, of the biggest competitor even.
You don't want to give away your data to the competition.
Indeed. So they had to change their model and invite other parties too to join in the overarching legal entity, and then things start to run. Then people participate, the companies participate, and then you can keep going. But it's this this collaboration that is really special. It's I think it's rather unique to see that the technology enables another strategy, literally.
Another thing that I find interesting that you haven't mentioned yet is the energy costs. Because when you read about Bitcoin, it's always like, the energy consumption of Bitcoin is the same size as a medium-sized country. But isn't that a problem for these corporate blockchains? Are they not very power hungry?
Yeah, so I think Bitcoin now uses as much power all the time, every second, as the Netherlands. Must be something around that. So that's not just a middle size, but even a Western country where a lot of electricity is used to power, well, I don't know, a bit anything. So it's indeed, in my opinion, it's a challenge. People who have a strong belief in the disruptive value of Bitcoin usually also have a different belief on the on the power consumption. Some of them will claim that Bitcoin is actually a store of power, so like a battery, which is really a bit mind-boggling in my opinion, but okay. But for enterprise ledgers, it's totally different. The power consumption of Bitcoin relates to how it works using proof of work as a mechanism to decide who is going to add a block. It's a puzzle that is difficult to solve, and once solved, easy to prove. But there is a rat race. Everybody needs to solve this puzzle, and the reward is still quite a bit with the Bitcoin price going up. So you have a huge incentive if electricity is cheap to try to solve it and to get this money going to have a. But that's how proof of work works. Most of the enterprise ledgers are, I don't know any other system that is going to keep using proof of work. Ethereum is moving away to proof of stake, and every other system found something more efficient. Every other blockchain tries to solve the challenges of all the other blockchains, and proof of work is really a hassle to work with. So in an enterprise system, you can have other algorithms in use, like proof of elapsed time, round robin. Everything round robin is literally you just point. One of the nodes is appointed to deal with the transaction. That's it. And the next time it's another node. So there is, of course, some overhead, as there is still data that is being synchronized across databases. You still need the network capacity for that. You still need electricity to power all the databases, all the servers, all the usually Kubernetes nodes. You need more power than one central database. I do agree. But the advantage is you don't need to power the data reconciliation. You can work together in a more efficient way, and we also have to see that most of the companies today have a goal to decrease their power consumption, and Bitcoin only has a reason to increase the power consumption. So while it does use more power than having a central database and connect everyone to it, I think that that the overhead is there, but will decrease over time. While with Bitcoin, it's the opposite. It tries to increase over time.
But maybe what I'm thinking of now is crazy, but isn't probably that's one of the things that makes Bitcoin very secure, because you have this competition between all the miners. But wouldn't it be a problem that some hackers, or I don't know how to describe it, can take over your enterprise blockchain if they somehow can override the system?
Perhaps, but let's try to visualize it. An enterprise system is usually private, permissioned. Bitcoin is public, permissionless. So let's just say we both have things of value, like a bar of gold. Mm-hmm. Now, in a public permissionless system, it would be as if we put this bar of gold on a central marketplace, and we yell to each other who owns the bar of gold. Jan, you own it, and then I bring you some food, and you say, cool, now you own it. But it's there in the middle of this marketplace, and we're yelling at each other, and everybody can hear we're trading. Everybody can see what happens. And the gold is there in the middle. It doesn't move because we don't have to move it. It's just an asset. We change the owner, and that's sufficient. Now, how would we protect this gold? If we would have to protect it, if 1,000 people join or 1 million people join, there is like a huge pile of gold. How will we protect it? Will we put 1 soldier on top, or 10 soldiers around it, or 1,000 soldiers around it, or perhaps even 1 million soldiers around it? Well, I would go for 1 million for sure, because it's not only my gold, but everyone's gold. It's out there in the open. So let's make sure it's protected. That's what Bitcoin does.
Yeah.
All these miners make it
because it's public.
It's public. It's out in the open. In a bank, in a most enterprise system, it's private. You don't even know it exists. You can run all around the world looking for the blockchain, but you won't see it unless you have the right identity and you have approval to have access to the system. And then when you're there, it's permissioned. So even if you get there and you don't have the right access rights, you don't get into the system. And if you get into the system, you will see that the things that are traded are usually data, and that they are not necessarily on the blockchain. They can be elsewhere. It can be simple evidence of data that is being transferred. So it's not entirely the same, but if we would have to seal off such a ledger, it would probably be sufficient to have a huge vault, like in a bank, and put 1 soldier in front of it. And it will also be secure, because first you have to find it, then you still have to get in, and then you still have to make sure that you can use it.
So actually these blockchains are probably more secure than a centralized database.
Than a centralized database? Well, it depends on what you want to do. If you want to ruin the system with a centralized database, you have a single point of failure. If you nuke the system and there are no decent backups and everything else, and it's not cloud-based with redundancy, you could destroy it. If you are going to steal data, then a blockchain has an advantage that you can have, that there are multiple places where the data is. So it depends a bit on which data is then stored where. Again, on a private permission, not all data has to be everywhere. If you don't need the data, it doesn't have to be on your node. But okay, so it's really hard to compare. It has to be secured. It depends on what is on the blockchain, whether it's really useful or not. And in enterprise systems, there are regulations like GDPR that apply. So the data that is there is not always that easy to use, like a Bitcoin is. Yeah,
very fascinating. We are almost at the end, but it's always difficult to play Nostradamus. But if you look like 5 years into the future, are there things that most people are not yet aware of that you can see or predict that probably will happen in blockchain, like for some applications that we can expect?
Well, if we look 5 years back, then we're still pre-ICO time. So I think looking 5 years, we never heard of NFTs. Well, we had the crypto kitties yet. I think it must be around that time. So we did hear of NFTs. Nobody just saw the use of it. It only became later the thing. I think it's very tough to look forward for 5 years. because the technology change is exponential. DeFi didn't exist 5 years ago, but now it does. I don't know what will happen in 5 years. I really have no clue. But if we can look 1 year ahead, I assume there will be more regulation. I think the DeFi space will probably grow. I also think that financial institutions like banks, they start to look into it. I just read today that the Bank of England is now looking at DeFi. I think more and more banks will, or financial institutions will take a look at centralized systems and how it can improve their processes. But these are things that you and I won't see most likely.
Yeah.
It's really the financial fabric that can change. And it is shown every day that it can change. The things that are there today, the billions going around, it's not monopoly money. You can call it magical internet beans. I often do. But these magical internet beans somehow still can get exchanged for fiat currency, and hopefully is then taxed as well. But I think there will be more of a blending between this existing technology, this still new blockchain technology, but I think that it will move into more of the regulated space, and that more of the regulated space moves into interest, at least, in these new evolutions. The challenge will be to have it all done within a regulatory framework, within a legislation that fits or that can work with the technology. And if I expect one thing in the next year or 2 years, then it's way more legislation and regulation. It seems a bit weird to regulate decentralized currencies, but as you also said in the beginning, most people use exchanges. It's not really peer-to-peer. And you also notice that how the exchanges are beefing up their efforts to identify customers. It's because it's needed. So things, companies like Binance, that's almost like not one, but a cluster of companies on its own, with their own blockchain, their own products, their own staking, their own NFTs. Everything is there. You cannot say this is a startup that is operating in an unregulated area. This is a huge company that is delivering a lot of services that are bank-alike to a lot of people. So perhaps it should be regulated like a bank as well.
Yeah.
And I think that's where most of the evolution will lie. Whether that will improve the technology or decrease the pace of the changes in the technology, that's hard to predict.
Yeah, very fascinating. Maybe in 5 years' time, we should do another episode to look back at what has changed and what we can expect.
In 5 years, we probably have some other new hype somewhere on the ledger. Whether it's I don't know what it will be, but it will be something like ICO or NFT. There is a lot of money going around that is not turned into fiat. And if it's there and you want to play with it, what do? Well, you invent something from which you can make more money.
Yeah.
And you try to trick other people in liking it as well.
Okay.
So that's what I think that will happen for the next 5 years.
We'll see. Okay.
We'll see.
Thank you, Koen, for being on the show.
You're welcome, Jan. It was a pleasure to be here. Thank you for all the questions.
I really enjoyed this conversation and I learned a lot from Koen, even though I've listened to many other podcasts about blockchain and Bitcoin before. You should definitely follow Koen on social media. He's on LinkedIn as Koen Vingerhoets. That's KoenVingerhoets. And he's on Twitter at ithronkoen. That's at ITHRONKOEN. And you can find me on Twitter at Jan Muschot. That's at JANMUSSCHOOT. I will also put the links to Koen's LinkedIn and Twitter in the show notes of this episode. Thanks for listening to the FinRestra podcast.